If you have searched for information about Social Security changes in 2026 and found different answers depending on where you look, that is because this topic is more nuanced than most explanations make it sound. Some sources say nothing has changed, others suggest payments may look different, and many people are left trying to figure out what actually applies to them. So today, we are going to walk through one specific Social Security rule that is getting more attention in 2026 and explain exactly how it works in plain English. No jargon, no assumptions, and no need to already understand the system. I am Andrew, and I have spent time reviewing the official Social Security Administration guidelines related to this specific rule. Everything we cover here comes directly from SSA.gov and related federal sources. Before we get into this, if you find this kind of clear, step-by-step explanation helpful, you can subscribe. Each week, this channel covers one Social Security or Medicare topic in the same straightforward format. Now let us look at how this rule works. The most common misunderstanding about Social Security is that once you start receiving benefits, your payment amount is completely fixed and does not change in any meaningful way. This belief makes sense because the SSA does calculate your benefit at the time you claim it, and that number feels final. But here is how it actually works. Your benefit can change after you start receiving it, depending on factors like continued work, updated earnings records, and certain annual adjustments. These changes are built into the system, and they follow specific rules that are often not clearly explained. We are going to go through those rules step by step so you have a complete picture. To make this concrete, consider someone like Walter. Walter is 67 years old and lives in Arizona. He worked as a warehouse supervisor and began claiming Social Security at age 64. At that time, his monthly benefit was calculated at $1,580. Walter assumed that amount would remain the same aside from small cost of living increases. However, Walter continued working part-time and earned an additional $18,000 per year for 2 more years. What he did not realize was that those additional earnings could be factored into his benefit calculation. According to SSA rules, if your new earnings replace lower earning years in your record, your monthly benefit can be adjusted upward. In Walter's case, his benefit increased to approximately $1,860 per month after recalculation. This is not unusual. It happens regularly, and understanding this rule would have made the change much easier to anticipate. Let us start with the foundation. According to the Social Security Administration's official guidelines at SSA.gov, your benefit is calculated using your highest 35 years of earnings, adjusted for inflation. What this means in simple terms is that the SSA looks at your work history, selects your top 35 earning years, and averages them to determine your benefit amount. If you worked fewer than 35 years, the missing years are counted as 0. That is an important detail. Now here is where the 2026 discussion becomes relevant. If you continue working after you begin receiving benefits, and those new earnings are higher than some of your earlier years, the SSA may replace those lower years in your calculation. You might be wondering, does this happen automatically? Yes. According to the SSA's Program Operations Manual system, this recalculation is done automatically when new earnings are reported. Now that we understand that, we can look at how this affects actual payments. When a recalculation occurs, your monthly benefit may increase slightly. The increase depends on how much your new earnings differ from your earlier years. The maximum Social Security benefit in 2026 for someone retiring at full retirement age is projected to be around $3,800 per month. However, most people receive closer to $1,800 to $2,200 because of average lifetime earnings. In Walter's situation, his newer earnings replaced lower income years from earlier in his career, which resulted in a modest increase. This next part is where it gets more specific. There is also something called the earnings test, which applies if you are below full retirement age and still working. According to SSA rules, if you earn above a certain limit, a portion of your benefits may be temporarily withheld. For example, in recent years, the limit has been around $21,000 annually. For every $2 earned above that limit, $1 in benefits may be withheld. You might be wondering, is that money lost? The answer is no. Once you reach full retirement age, the SSA recalculates your benefit and credits you for those withheld amounts over time. And finally, This is the piece that ties everything together. One thing worth understanding about Social Security is how it connects to taxes. According to IRS Publication 554, your Social Security benefits may be partially taxable depending on your total income. If your combined income exceeds certain thresholds, up to 85% of your benefits could be subject to federal income tax. This is not a penalty. It is simply part of how the system integrates with the broader tax structure. In practical terms, this means that changes in your earnings can affect both your benefit calculation and how your benefits are taxed. Before we finish, let me answer 3 questions that come up most often about this topic. Question 1. Can my Social Security payment increase after I start receiving it? Answer: yes. If you continue working and your new earnings replace lower years in your record, your benefit may be recalculated and increased. Question 2. Do I need to apply for a recalculation? Answer: no. The SSA processes this automatically based on reported earnings. Question 3. Will working reduce my Social Security permanently? Answer: no. If benefits are withheld due to the earnings test, they are later factored back into your benefit after full retirement age. Everything we covered today applies generally, but your specific situation may include details that change how these rules apply. The most reliable way to get your exact answer is by creating or logging into your account at ssa.gov, where you can view your earnings record and benefit estimates. You can also call the Social Security Administration directly at 1-800-772-1213 and ask about recalculations or benefit adjustments. For tax-related questions, irs.gov Pub 554 provides a detailed guide specifically for older adults. These are official resources, and they provide answers tailored to your situation. One factual note before we finish. The SSA communicates by mail, not by phone calls demanding payment, not by texts threatening benefit suspension, and not by emails asking for personal information. If you receive that kind of message, it is not from the SSA. You can verify any communication by calling their official number. I am curious, was there a specific part of this rule that felt unclear before this explanation? You can leave it in the comments. Many future videos are based on those questions. That is this Social Security rule explained as clearly as I can put it. If something is still unclear, the comment section is open, and I read every question. If this video was useful, share it video with like subscribe and who received an overpayment notice and did not know they had options. I am Andrew, a channel subscribe, latest news. I will see you in the next video one.